Could Celsius stock be a breakout stock to be holding in 2025? In this video, we're going to be looking at some of the financial data to help us see whether or not this stock is going to have a really good year this year. Very quickly, I'd just like to say that this stock was brought to my attention by JKR Investing, so if you would like to see what he thinks about this stock, go check his channel out. So what is Celsius for the people that don't actually know what they do? So Celsius is a health-orientated beverage brand known for its fitness and performance-focused drinks. With the core product, of course, being the energy drink, Celsius provides a range of ready-to-drink energy drinks which promote energy, metabolism boosts, and fat burning. Their drinks are marketed as healthier alternatives to traditional energy drinks, containing no sugar, no preservatives, no artificial flavors and colors, ingredients like green tea extract, ginger, guarana, and caffeine. I wanted to keep that brief because it is just an energy drinks company at the end of the day. I don't think there's too much to talk about. So if we look on a yearly chart for Celsius, we are currently down a massive 51%, with an earnings per share currently at 0.72 and a P ratio being at 35. This stock looks to be really overvalued by just looking at this data. However, this doesn't necessarily mean that they are not going to see a lot of growth in the next year, as if we look to see what the analysts are actually projecting for Celsius, we can see here a projected growth for the next year of 36.85%. So in March 13th, 2024, the stock reached an all-time high, reaching $96.11, and as of now, January 26th, we are currently at 25.77, which is a massive decline from their peak, of course. So in the first half of 2024, Celsius saw a massive increase in their stock due to their social media presence and health-focused product, capturing the market share from major competitors such as Monster. And as of mid to late 2024, the stock experienced a decline influenced by factors such as reduced orders from major distributor PepsiCo and broader economic challenges affecting consumer spending. Despite recent setbacks, analysts remain optimistic about Celsius's growth prospects, citing expansion into grocery and online sales, as well as international markets. The acquisition of Big Beverages is also expected to enhance supply chain control and production flexibilities. So what could lead to growth for this stock in 2025? Well, to start with, partnership and distribution expansion efforts are growing, of course, with Celsius being partnered with PepsiCo, leveraging its extensive distribution network to expand into convenience stores, grocery chains, and new regions, of course, as previously stated. They are actually expected to now grow further into European and Latin American markets. Whilst we do have Celsius, I know for sure in the UK, it is not actually that massive here. It's not something that you will see over a Monster. It's kind of like you'll see a couple of them, whereas Monster tend to have like a massive section of drinks in most supermarkets in the UK. That's just my own personal opinion, but I expect to see their standing in this market in EU and the UK grow in the next year, as now they are partnered with PepsiCo, of course. Furthermore, there is growing demand for health-orientated drinks. Its fitness-orientated brand appeals to millennials, Gen Z, and gym goers who are significant growth demographics. Product innovation will also play a large factor with Celsius as they release new flavors, new enhanced drinks with more protein, for example, or more caffeine. I don't really know what chemical compounds make up energy drinks. I don't really study energy drinks at all, but I imagine that there is a lot of innovation that goes into these sorts of factors. Celsius does definitely need to enhance its online presence, even though it is massive in the States. As I said, it's not really that big here. It's not something that we know of too much in the UK. Obviously, we do have it, but I imagine that this stock will grow massively over the next year if they do manage to influence their partnerships and just grow their marketing further and further into European and Latin American markets. So if Celsius can successfully execute all of these strategies, it will definitely have a premium health-focused image, enhancing its market share against its competitors. So what are the actual potential risks for Celsius going into 2025? Well, there is of course the heavy reliance on a single market segment. With Celsius generating the majority of its revenue from energy drinks, over-dependence on this product category could prove vulnerability for Celsius going into the future. Of course, competition is massive in the energy drink sector, with Monster, Red Bull, and Bang Energy being traditional competitors for Celsius. These competitors have a larger budget and established market share, which could limit Celsius's growth, of course. There is the risk of supply chain and distribution risks. With it being very dependent on PepsiCo for distribution, this could definitely limit its operational flexibility. So that's enough about the risks for Celsius. Now we're going to look at their financial data and put it into my system to see where exactly this stock is heading on a technical basis. So starting off with the liquidity ratio here on the left, we can see that this is ridiculously outstanding as their debt is just incredibly low compared to their liquid cash, as they have a liquidity ratio currently at 154, with it previously being up as high as 568 within the last 5 quarters. I have personally never seen such high numbers, of course, for a liquidity ratio, so this is really impressive. So now moving on to the retention rate for Celsius, here we can see that they are currently at 2.4, which is incredibly low. However, in the past they have been really high, so it will be interesting to see if they can start to climb back up in the next quarter. This next quarter, I believe, is to come out late February. I want to say around the 24th. I will check on that. It is in fact the 26th of February, so please do put that in your calendars if you do hold this stock. So again, retention rate looking relatively good apart from the previous quarter, but I am expecting this to only increase again. So now if we move on to the free cash flow for Celsius, this is looking relatively strong. It's got a bit of volatility, but with Celsius only being founded in, actually it was founded in 2005. So with it being founded in 2005, I would expect this to be a bit better. Of course, Celsius is massively down at the moment from its peak in March, and the trend lines are in fact expecting to see a bit of a bowl effect here as the decline is starting to slow down. Looking at the volume, we are actually seeing this increase, which, seeing these go together, is a relatively bearish indicator, but of course it's not the end of the world. If we look here on a 91 exponential chart, it's basically the exact same story. So taking a look at the figures for Celsius here, we can see a P ratio of 36.15, of course, a 52-week high of 99 and a low of 24, with the current price being at 25. Between the high and low, it is a difference at $75, which is of course absolutely huge, and we can see a beta rate of 1.76. So now let's see what the intrinsic value for this stock is. So currently at the current buy price at $25, with the growth rate from the Analysts on Yahoo Finance projecting a growth rate of 36% over this next year, with the earnings per share at 0.72, we get an intrinsic value on the left here of $54, with an acceptable margin of safety at 75%. This gives you a buy price at $40, which is currently, of course, way above where we are. So on the left here, we are seeing it is a buy. If we do actually move over to the right, we see a very different story. With the exact same growth rate, we do actually see an intrinsic value at $28. This being just above where we currently are. If we add a margin of safety into this at 75%, this gives you an acceptable buy price of $21, which is barely just below where we currently are, but it is of course below. And in the top here, we can see a mean acceptable buy price at $31, which is of course above where we currently are. This is taking the average between both the bullish and bearish, and the intrinsic value is 41. So currently it is looking like a buy according to my system, and this is of course with the growth rate provided by the analysts. So if we do actually change that up a bit, because analysts always tend to slightly underplay what a stock is worth, so it's currently at 36. If we make it 40, for example, let's see what that does to the stock price. So looking here on the left, we can see the intrinsic value has gone up to 58, and the acceptable buy price is at 43. And on the left, if I move my camera, it is at 25 and 31, sorry, on the intrinsic value, and the acceptable buy price is at 23. So moving the growth rate back down to 36, on the left here we can see Peter Lynch's value, which actually gives us a result of 1, which shows this stock is currently fairly valued, and this is actually a really bearish indicator. So to see this say that the stock is currently fairly valued basically tells me that it is undervalued. So what are the analysts actually saying about this stock at the moment? Well, looking down here, we can see based off of 21 analysts, they are actually projecting Celsius at a buy, with a projection over the next 90 days at a high of around $38 and a low of around $8. We can see there isn't actually a set growth rate for this stock. Personally, I think we are going to see the stock grow over the next 90 days, but I don't know how much. If we do actually scroll down here, looking at the target price over the next year, we are seeing them actually put a target price at $40. which of course is massively above where we currently are, so it does warrant the buy. So what is my opinion of this stock? We'll get to that in a minute because I just wanted to show you this quickly, which I almost forgot about. So looking on the moving averages for Celsius, we can see we're just below the moving average for 50 days at the moment. If we do go above this 50-day moving average, I think we're going to see a lot of buying pressure in this stock. If we do actually look at the enhanced buy and sell indicator here, we can see we are currently in a short position within this stock, and this has been since June, and it looks to be as if we're getting very close to this opening up into a long position. With us opening up into a long position on the 15-minute chart, and it's looking to be as if this is just going to continue over the next couple of weeks. So it could potentially be a good time to buy this stock. So that concludes this video. What is my final opinion on Celsius? Well, I think it is probably most definitely a good stock to be buying. I would definitely rate this at a buy at the moment. So on a ABCD chart, I would put this at a B right now. I think there is a lot of potential for this stock. There is, of course, a bit of risk with their competitors and the fact they're very dependent on one market, but currently I don't see that being an issue at all, and I think Celsius is going to have a lot of growth in 2025, especially with them hoping to expand further into new markets. So I hope you have enjoyed this video and found it somewhat useful. If you have, please do leave a like, comment, and subscribe, and I will see you for the next video.